Jagdish Malkani, member BSc and NSC, joins us right now on the show to speak about the fundamental end of the market. Jagdish, good having you. Thanks so much for joining in. What's your sense? It's been a bit of a ho-hum kind of a market, though with a bit of a negative bias. The political situation as well, not too conducive. How do you look at investments right now? Do you think there will be much better levels ahead?
Well, short term, like today is pretty much the last day. It is the last day of the financial year, so all the there will be all the usual shenanigans that go on with the last day. Shuffling around portfolios, etc., redemption, mutual funds, the works which has already been happening. So Asia is off to a bad start. Cyprus problems not really resolved, and it's looming over Europe. Like sort of Damocles. So I expect a weakish day again today. People not wanting to take positions home over the financial year. But really speaking, I think the March sell-off, especially in mid caps and small caps, has been overdone. And I do think there's opportunity, and I expect a better April certainly. The FII interest continues, of course. There is much of this wait and watch, and let's see if all the great talk of Mr. Chidambaram and his team translate into some action. But I'm quite optimistic, and I think the fall has been overdone. There are some mouth-watering large caps, let alone what's happened, the carnage in the mid-cap and small-cap space.
So Jagdish, which are those stocks that you would cherry-pick already?
Well, large caps, there's a whole host of them, but just to rattle off a few, in the oil and gas space, I think my old favorite Cairn is really been beaten down for various reasons. Reliance Industries itself, I think, is going to be a bit of a star this financial year. You've got, even though PSU banks, I'm not personally greatly favored, but everything at a price is attractive. So the biggies, Bank of Baroda, State Bank of India in that order. Even in private banks, some of the more smaller names, I think, for example, Karur Vysya. So many stocks in even in infrastructure. Of course, there's pain out there, but I think many stocks have been really beaten down. Even in friendless metals, when you've got Hindalco and Tata Steel and even PSU stocks like Nalco. So there are many stocks that have been, I think, pummeled down needlessly.
Jagdish, what do you do with Hindustan Unilever? The volume growth being 5-6% might well turn out to be the norm. They have hiked select prices, which of course the company has denied, but that may well happen over the next couple of months as well. How do you play some of the large cap FMCG names, particularly HUL?
Well, HUL clearly, this news is not heartening. They're talking about the lowest volume growth in I think 13 quarters is what I was reading. So it's the stock and the company has been on a tear for a while after a dismal sort of 10-year period. And generally, FMCG has been seeing the defensive pack, and HUL is the leader. But I do think you will have a situation, if my hypothesis is correct, that if the market turns a little more bullish, then it'll be back to more of the fallen angels, and the defensives like lever could take a bit of a drubbing, and especially in light of slowing volumes, etc., and even price resistance. In general, the FMCG pack has had as a golden run, but I think selectively there are great stories. My personal picks are like Tata Global is it's a global play on beverages. It's come off from a high of 180 thereabouts to the 120s, I think, and under the new CEO, etc., with Starbucks, etc., happening, and coffee really rocking. So that's one I like very, very much. And again, our Indian pack also is attractive. And now the other day, for example, Marico, because the Sri Lanka caper came off. So you have opportunities like that. But in general, I think selectively FMCG should still have a good financial year.
Jagdish, earlier on you were talking about your preference towards names like Cairn and Reliance. Highlight for us what works in the favor of these two names.
I mean, just common sense, without giving huge numbers. I mean, Cairn, continues to be very well managed. It's come off. The Rajasthan government is being pretty cooperative in those three fields. They're looking elsewhere. HPCL has set up a whole refinery based on getting raw material from them. So I'm saying, if we really believe in the country and the economy, etc., how can no government, whichever form, post-election, etc., will want to play with a player coming up in energy, which we know is a bit of a horror story for the country. And equally, Reliance with gas pricing, the big bogey over its head, hopefully being resolved with the Rangarajan committee, etc. Its play in broadband, many things that are happening. Petrochemicals continues to be quite good. And let's say the stock has gone nowhere for quite a few years. I do believe this will be one of the first to rebound when and if the market comes back.
Jagdish, what happens when the earnings kickstart, which is going to be in a few days from now? First amongst the rung, of course, being IT. Do you think all the positives are now priced in when it comes to names like a TCS or, for that matter, Infi?
I think so, and it's a bit like what I was talking about Fmcg. They've been great defensive plays, but now they're starting to look stretched. The big pack, certainly TCS, Infosys, HCL Tech also in its own way. So as I said, if the market starts to do this thing, then it will be back to some of the other sectors which have become very friendless, overly friendless in this March meltdown, and so I think you should see a bit of that happening in these also. Even though they continue to gain market share, US is rebounding nicely, their markets, we are gaining overall as an IT pack, etc. But all that is kind of built into the prices.
Okay. Jagdish, one quick word. If there is any differentiation between the infra pack, or infra or the cap good names, because all of them are grinding lower. The rolls in the series as well are extremely high for the cap good names. Does L&T or a couple of others find favor, or you would just avoid it completely?
No, absolutely. In fact, on a contrarian view, I think these have become really, they've been bludgeoned as it were, and L&T straight pops out of that. And then some of the MNC names, I think the Siemens, ABBs of the world have been, there's just too much pessimism built into those prices. Even maybe a Thermax.
Okay. The other bit would be infrastructure. Mind you, GMR Infra could be active today, and we'll of course get in the management maybe later on the show as well. Selective stake sales happening. These stocks, Jagdish, have been pummeled out of shape really. I mean, I don't know how soon can they recover, if at all, but there are selectively one or two of them highly leveraged but making stake sales, having off non-core assets to reduce the debt, which would probably hold them in good stead. Anything that you like in this space?
Neeraj, to be perfectly honest, when you've got a much simpler plays out there, I'd rather not, obviously it's for the more plucky investor, maybe, there are stories there, etc. But it's just far too much leverage, far too much debt, far too much non-transparency. So I think if you're getting, much more quality and good names, I think better to get a good night's sleep.
Dealers have suggested United Spirits as a stock, maybe from a trading perspective, but how do you like this one from a slight medium-term perspective? A couple of upgrades that have come in as well, around 1900. What would be your call on the stock?
I think in the short term there's going to be some pain, because once the cleaning up of the accounts, all this story unwinds itself. Dr. Malia ran a different ship. But going further, yes, absolutely, the liquor market, and you can see, even though it's apples and oranges, but how Pernod Ricard, the unlisted company fares, though of course again it has to be qualified that there are some local brands, not the international brands. But generally, I think a bit like what United Breweries and Heineken has achieved, United Spirits can and will do with Diageo management, but that's over time. So I think short term you could have some pain post open offer, that whole settling of the dust, etc. But no doubt that longer term, I think the whole market will see a shakeout, a cleaning out, as it was. kind of been a murky business for a long time. The whole business will get cleaned out.
Jagdish, good chatting with you. Appreciate you taking the time out and joining us on the show.